Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets behind the money. Today we are diving deep into Spruce Power Holdings Corporation's latest quarterly report. And let me tell you, it's a wild ride from soaring revenues to some serious concerns about their ability to keep the lights on. If you like getting the real story behind corporate filings, hit that subscribe button and join us on Discord. The link is in the description. So Spruce Power Holding Corporation, they're in the business of solar energy for homes. Big player in the US, they've got about 85,000 home solar assets and customer contracts. They also do servicing for other solar system owners. Think of them as the folks who keep the solar panels running smoothly for a lot of people. Let's start with the balance sheet. As of the 30th of September 2025, Spruce Power had total assets of $857 million. That sounds like a lot of green energy, right? But look closer. Their cash and cash equivalents were down to about $53.6 million from $72.8 million at the end of 2024. That is a significant chunk of cash gone. And their property and equipment, the actual solar systems, that is sitting at $569 million. Meanwhile, their total liabilities are a whopping $729 million. That means they owe more than they own. That's a pretty big red flag right there. Now for the income statement, the profit and loss. For the 3 months ending the 30th of September 2025, they actually saw their revenues go up by 44% compared to last year, hitting $30.7 million. That sounds great, but here is the kicker. Their net loss attributable to stockholders was $860,000 on the quarter. Last year, in the same quarter, that loss was a massive $53.5 million. So, while revenues are up, they are still losing money, but a lot less. For the 9-month period, revenues are up 42% to almost $88 million. But they still posted a net loss attributable to stockholders of about $19.2 million. The good news. That is still a big improvement from a loss of $64.6 million in the same period last year. So they are improving, but they're not out of the woods yet. One interesting point is their cost of operations and maintenance. For the 3 months ending the 30th of September 2025, this actually dropped by 53% to $1.8 million. They say this is due to efficiencies and nearing the end of a meter upgrade program. That's good to see expenses going down. But then you see these huge swings in litigation settlements. For the 3 months, it dropped 95% to $373,000 from $7.2 million. This was due to a big settlement last year, and then there was that massive goodwill impairment of $28.8 million in 2024. These one-time big hits can really skew the numbers. Looking at cash flow for the 9 months ending the 30th of September 2025, they used $228,000 in operating activities. That sounds small, but remember, it's a use of cash, meaning more cash went out than came in from their regular business. Investing activities brought in $16.9 million, mainly from proceeds from their 7th master lease. Financing activities, however, were a big cash drain with $27.1 million used, primarily for debt repayments. Now, let's talk about their debt. Spruce Power has a significant amount of non-recourse debt, meaning if they can't pay, the lenders can only go after the assets tied to that specific loan, not the whole company. As of the 30th of September 2025, their total non-recourse debt was $685 million. The scary part. The SP1 facility, which is a big chunk of that debt, matures on the 30th of April 2026. That is less than a year away, and the report explicitly states they might not have enough cash to pay it off. This is what they call substantial doubt about their ability to continue as a going concern. That's a serious phrase that means they might not be around in a year if they can't sort this out. They are actively trying to refinance this SP1 facility. They have term sheets, which are like preliminary offers from potential lenders. If they fail to refinance, it could lead to a foreclosure on their assets. And even worse, a default on the SP1 facility could trigger a default on another loan, the second KeyBank credit agreement. This is a critical situation. Spruce Power has also been involved in a lot of legal battles. They settled a securities class action for $19.5 million. Then there was another Delaware lawsuit that settled for $4.75 million, plus shareholder derivative actions that led to governance changes but no monetary payment. They are also under investigation by several state attorneys general. It seems like they've had their fair share of legal drama. A quick note on recent tax changes here. They mentioned the new tax act enacted in July 2025, but they don't expect it to materially affect their financial statements. That is a little bit of good news, or at least it's not bad news. They made a significant acquisition in November 2024, buying about 9,800 solar energy systems for $132.5 million. They call this the initial NJR acquisition. They also bought more of those additional systems systems in 2025. This is how they are growing. This acquisition was funded partly by a new credit facility, the SB5 facility, from Banco Santander. Now, for their business segments, it looks like they operate as one main segment. Their CEO reviews consolidated segment expenses to make decisions. They break down some expenses like professional services and compensation, but the core business is solar energy and related services. Let's look at earnings per S-Hair. For the 3 months ending the 30th of September 2025, the net loss per S-Hair was 5 cents. That is a lot better than the $2.88 loss per S-Hair in the same period last year. For the 9 months, the loss per S-Hair was $1.06, down from $3.5 last year. So on a per share basis, they are definitely improving their profitability. Here is a really crucial part, their internal controls. They've stated that their disclosure controls procedures were not effective as of the 30th of September 2025. They identified a material weakness in their control environment, meaning they don't have enough qualified staff to manage controls properly. They also have a material weakness in control activities, specifically related to revenue recognition. This means they're not consistently getting their accounting right for how they record revenue, especially under the ASC 606 rules. They are working on fixing this though. They have a remediation plan including training, creating an internal control department, and implementing new controls for billing and revenue recognition. They are hiring qualified personnel with specialized skills. Management believes they are making progress, but it's going to take time. Therese also has significant risk related to leadership changes. They had a CEO transition in 2024, and their chief financial officer resigned in May 2025. They appointed an interim CFO, but it is uncertain if that will continue. These management transitions can create instability and affect business operations. My take so. What is the bottom line for Spruce Power? On one hand, they are growing their revenue significantly and improving their net loss year over year. They are making good progress on their core business and expanding through acquisitions. Their focus on renewable energy is definitely a positive long-term trend. However, the red flags are hard to ignore. The debt situation, especially the looming maturity of the SP1 facility, is a major concern. Their substantial doubt about continuing as a going concern is a serious statement from management. They are really relying on refinancing this debt, plus the material weaknesses in their internal controls over financial reporting, particularly revenue recognition, mean to raise a risk of accounting errors. The executive turnover also adds a layer of uncertainty. Spruce Power is in a high-growth industry and they are actively acquiring assets, which is good, but they are also carrying a lot of debt and facing regulatory and operational challenges. It feels like a company with potential, but also a lot of risk. They need to successfully refinance their upcoming debt payment and strengthen their internal financial controls to truly stabilize and grow. What do you think about Spruce Power's situation? Are you optimistic about their refinancing plans and their ability to overcome these challenges? Let me know your thoughts in the comments below. If you found this breakdown helpful, smash that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community for more discussions. Thanks for watching, and I'll see you in the next one.